I do not think it's priced in at all, because unless you were within crypto, you can't imagine how difficult it was. I mean, literally, like imagine having a $6 million check and walking to a bank and them saying, no, thank you. We don't want your business. It's like, that's a wild idea. And then imagine going to another bank, and actually imagine going to like 15 banks and having them all say no. And you're just like, I want to deposit this check so I can start a business. They're like, sorry, we don't want your money. It's wild, right? It's completely wild.
Hey everyone, welcome for a new episode on Derivatives Decoded by Kemet. Today I'm pretty excited to share our guest, Matt Hougan, who is the CIO at Bitwise Asset Management. Matt, how are you doing today?
That's really excited to be here. Doing great. It's a beautiful day.
Awesome. Matt, I always try to start these episodes by just giving a chance for our guests to kind of like introduce themselves and talk a little bit more about, honestly, what a lot of people are also very interested in learning about people's like sort of journey into the crypto side of things. So can you walk us through the memory lane? Like, how did you end up here?
Absolutely. Yeah. So Matt Hougan, I'm the chief investment officer at Bitwise. As you mentioned, Bitwise, obviously a specialist crypto asset manager. We manage $10 to $12 billion in assets across ETFs, SMAs, private funds, a hedge fund structure in both the US and Europe. I've been at Bitwise for 7+ years. Before that, I was in the ETF industry. I was the CEO of ETF.com, which was a data analytics and media business covering exchange traded funds. And that's actually what brought me into crypto in two different ways. You know, one, I had the experience being early into ETFs of seeing what was a financial technology. Ultimately, what an ETF is a financial technology that the world was very skeptical of. You know, people called them weapons of mass destruction, EFTs. There were congressional hearings about whether ETFs were destroying the American entrepreneurial dream. People were very skeptical of this financial technology, but I saw that if you look through that skepticism to what it actually did, it was faster, cheaper, more tax efficient, better. Aligning your career with the world waking up to the reality of what a technology could do was a tremendous accelerant in the ETF space. So when I sold ETF.com, I wanted to find another financial technology that saw the same thing, where the world was skeptical of it because they didn't understand it, but where it fundamentally made the world better, faster, cheaper, safer, etc. And I thought the world would wake up to that over time. Obviously, crypto fit that bill entirely. It's also on a more acute case. One of my former employees at ETF.com, who's now a general partner at Blockchain Capital, went on to do great things in Bitcoin and crypto, was the one who introduced me to Hunter Horsley, the founder of Bitwise. And so all of that tied together. So I see a lot of parallels between the growth of ETFs and the growth we're seeing in crypto. And it makes me very excited to be part of this industry. And I love what's happening in crypto right now.
Yeah, I think this is a great segue into something I'm personally interested in learning from you, right? So how have things evolved like since you've joined Bitwise, right? And how, like, if you want to draw a line between everything prior, right, to you kind of being in the digital asset industry. And again, yes, an ETF is an ETF, but it's obviously a very different world, right, when you're trying to put out an ETF on top of, Bitcoin. Maybe tell us more about like what is different, what has changed, and how has it changed also from the moment that you joined Bitwise?
Yeah, I mean, one way of framing it, which I've been thinking about a lot recently, is over the last 7 years, Bitcoin and crypto in general have just knocked down existential risk after existential risk after existential risk. I know today, even things that we just take for granted, like institutional quality custody. When I started at Bitwise, that was not the case, right? You were not dealing with entities like Coinbase and Anchorage and Fidelity that custodied, hundreds of billions of dollars of assets and had the best security procedures. There was still a lot of self-custody in the space, or there were very minor names where you really had to, ask yourself if this was going to be around for a long time, right? I think the largest custodian at the time was a firm called Kingdom Trust, a great firm, but not one people had heard of, and certainly required an extra level of due diligence. So we chopped down custody risk. The trading ecosystem in crypto was not nearly as advanced then as it is today. Back then, you were trading on exchange. Today, you're trading with firms like Jane Street and Falcon X and Susquehanna, et cetera, much more institutionally oriented. So we chopped down trading and liquidity risk. Obviously, the regulatory risk was absolutely massive back then. You had a senator waging a war on crypto. You had the SEC suing everyone except for FTX in the crypto space, massive regulatory risk. I thought there was broader government risk. We were worried about China banning Bitcoin, which they did. We were worried about the US banning Bitcoin. Today, we have a strategic Bitcoin reserve. So from a industry perspective, the journey of the last 7 years that I've experienced is just existential risk after existential risk being completely de-risked and headwinds turning into tailwinds. And that's translated into what we see from institutional investors. Bitwise is oriented to serve primarily financial advisors, family offices, and institutions. And in the early days of our journey, it was very hard yards. I think it took us 3 years to get to $100 million in assets. It took us 6 years to get to $1 billion in assets. And then over the last 18 months, we've gone to $10 billion in assets. So as we've knocked down these risks, the appeal to this institutional crowd has increased, I would say, at an exponential rate. And now we're really at the point where Bitcoin can be analyzed and crypto can be analyzed for what it is as an asset and an opportunity without these sort of overhanging risks that we wrestled with so much for the last 7 years.
So, I mean, if in mind may I ask, I think I've asked the same question a bunch of our guests, but I think, this is a great question for you specifically, like given your journey. If I'm a new institutional investor, like coming to this space today, what do I need to know? Like, what do I actually need to know to actively invest in the space and kind of feel comfortable, right? And I think it's quite a broad question. Maybe you can help me land this to where you think makes sense, because I think for everyone, right, they have their own idea of like what is comfort when it comes to investing in digital assets in general.
Yeah, I mean, the beauty from an access perspective is it's gotten relatively easy to do it in a comfortable format. You have regulated products, whether it's spot-based ETFs or derivatives, and I think you can take a great deal of comfort from that, right? These are the best-in-class custody, best-in-class trading, the protections of the 40 Act and other regulatory structures. So I think access has become relatively easy. The big question that lingers in people's minds specific to Bitcoin is, why does this thing have any value? I still think that's what trips people up. Why is this not tulips or beanie babies? I think that's what trips people up. I'm happy to answer that question if that's where you want to take this. I think the other thing is, how does it fit in a portfolio? And I think there's some pretty simple math for most investors that suggests something like a 1 to 5% allocation rebalanced increases your risk-adjusted returns over any meaningful period that you look at historically. And I think the outlook for risk-adjusted impact is better today than it has been in the past because we've removed so much of that risk. So depending on it's a portfolio perspective, I think there's a simple answer. The more existential question I think people have is, why does this have any value? I think there are great answers to that. So happy to go there if there's interest, or take it another direction.
No, I mean, I'd love to get your thoughts on that. But before we go into that, I think you've touched on a very interesting side of the equation, which is like sort of access, right? But then obviously access is one thing, but what keeps people up at night most of the time is also risk management, right? Like generally speaking, understanding, which we'll get to that. I'd love to hear your answer. So why is it not tulips, right? Why is it not like beanies, right? But the question is, given that it currently does have a value, right? How are institutions generally dealing with risk management, even with products like ETFs that Bitwise like offers, right? Like, how do you think about risk management in that space as someone who offers a very popular product?
Yeah, from our perspective, you could think of it at two levels. On a product-specific perspective, you think about risk management by structuring your custody and trading in a way that minimizes the risks of sort of existential levels of loss, right? So ensuring you're working with a qualified custodian and ensuring in how you trade Bitcoin that you're not exposing it to counterparty risk or to exchange risk as it journeys from wherever it is into your institutional custodian. And, we handle that at Bitwise, trading on bilateral basis with institutional trading counterparties that need to deposit it directly to cold storage before we compensate them. And that that sort of eliminates that sort of risk. I think from the other side, from a portfolio risk management perspective, I think the answer comes down to position sizing and rebalancing the same way it would with any other major asset class. And I think if you control for position sizing and you have a disciplined rebalancing strategy, I think you can check that box from a risk management perspective. So yeah, again, I think this was a much harder question 5 years ago, both from a product perspective, when you're really digging in much deeper into the trading ecosystem and much deeper into the custody ecosystem. And from a portfolio perspective, when you had this binary risks out there that could drive, really existential level drawdowns, I think those have been mitigated. So now it's high quality product and underlying infrastructure on one side, and then position sizing and rebalancing on the other side.
So you feel like the infrastructure is mature enough to do? Like if you were to be a hedge fund manager tomorrow, right? Do you feel like there's existing platform tooling, on the OMS side, on the PMS side, on the RMS side? I mean, even from a counterparty perspective, like, do we feel like this is mature enough at this point, or there's still a lot, to go?
I mean, you would be the expert on that. My sense is it's matured, but there's still room to grow, right? So you've experienced this for both the traditional side and from the crypto side. So I think, you can see the delta of where we need to go versus where we are today. I think it's significant. My experience here has been from the 2017 side to the 2024 side, and that's dramatically improved. But I fully agree that there's still yards downfield that we need to cover.
That makes sense. I guess maybe tell me more then. Why does Bitcoin have value?
I mean, I do think that's easy. And I know this is maybe table stakes for most people to this podcast, but when I talk to a skeptical institution about that question, I just describe Bitcoin as a service. We're all used to software as a service, that we pay a subscription fee to Salesforce for access to their CRM software. Bitcoin provides a service, which is storing wealth in a digital format without a bank. You may want that service, somebody else may not, but evidently hundreds of millions of people want that service. The difference between a SaaS business and Bitcoin is just you can't pay a subscription fee to Bitcoin. What would that even mean? There is no Bitcoin Corp. The only way to access the service Bitcoin provides is to buy Bitcoin. And if you buy Bitcoin, you get the service. And the reason it has value is that there's a limited amount of Bitcoin, but there's increasing demand for that service. So I think when you step away, when you frame it as a service that the only way to access is to buy it, I think you can understand why it has value. We all know services have value. You just can't pay a subscription fee for this service. It doesn't make sense. You only can access it by buying Bitcoin. And I think that's ultimately what drives its value is demand for this service that it offers.
Do you view any other assets within the space as similar?
It's a great question. I mean, I guess, you could argue that Dogecoin is similar. I'm not sure what service it provides. It provides the service of having a coin with a dog. If more people want coin with dog, then the price will go up. I think the other assets in the space, whether it's, Ethereum, Solana, or application-based assets, are primarily, not entirely, but primarily some version of cash flow like assets. And the ultimate return profile of those is going to be cash flow or user demand driven through buybacks and similar programs. So the way I approach valuing ETH or Solana, I think they have some value as a carrying asset within the ecosystem. And certainly when we see their use as the denominator for assets in that ecosystem, like during the ICO phase, the denominator was an ETH. During the NFT phase, the denominator was an ETH. Maybe in the meme coin craze, the denominator was in Sol for a while. I think you see some monetary like aspects to them, but the primary driver of those aspects from a valuation perspective is some version of cash flow generation, whether that's fee switch or it's yield or it's buybacks. And I think it's a really different story than the Bitcoin story.
I probably agree, to be honest. I think it's Bitcoin is pretty hard to kind of compare to anything else at this point. But I guess with that being said, where do you see sort of innovation taking us next within the institutional space? Right? Like I think a lot of folks were super excited about the moment where an ETF gets approved. We're done. That happened, right? We're past that. You mentioned obviously volumes coming in, going tenfold over the same amount of period, right? That you were spending over at Bitwise, and I think that will continue to go from there. But what's the next product? Like, where do you see, the next institutional product that's going to drive more adoption?
Yeah.
Look like, and is it going to be on chain or is it not?
Oh man, there are a lot of answers to that question. I actually think there's a huge amount of product growth. So you're right that the Bitcoin ETF and beta-based exposure has done 0 to 1. Now it's going to do 1 to 10, but maybe that's less interesting than the 0 to 1 process. Within that space, I think the next big marginal product is an index-based exposure for people who just want crypto. But again, that's not maybe the most like innovative piece. Outside of that, the massive glaring areas that I see, probably the largest opportunity is income generation on Bitcoin, which can be approached from multiple perspectives. It can be approached from a derivatives overlay perspective. That's probably the most popular. It can be approached from the emerging staking ecosystem. I know that's a controversial concept, but that's another approach. It can be approached in the lending ecosystem, which comes with its own attendant risk. But the demand for existing large Bitcoin holders to generate some degree of income on their holding while still gaining, a majority of the upside exposure is a massive TAM, right? Let's say there's $2 trillion of Bitcoin to round up. What percentage of that wants to generate some amount of income while still having upsides? It's not 2%, right? It may be 25%. It may be 50%. It's a bigger TAM than ETH, right? ETH is a $200 billion asset. The TAM for income generation on Bitcoin, just a massive asset. So I think that's a huge area of innovation, something I spent a lot of time thinking about. And then I think anyone looking at the growth of BITL, the growth of tokenized assets, I think has to be thinking there's a huge on-chain opportunity. Bitwise plays a little bit in that field in the staking ecosystem. We acquired Attestant, which is an Ethereum staking provider. And that's sort of a down payment to building on the on-chain space. But I think that is, if you're talking about trillion-dollar opportunities, ultimately Bitcoin income is something like that from an AUM perspective. And then on-chain, probably real-world assets exposure is also a really significant opportunity.
So are you seeing a lot of institutional interest in RWAs in general? Like, is the hype real or is it just mostly still hype?
I think it's hype if your perspective is TradFi accessing TradFi assets in a tokenized wrapper. I think that's hype. I think the real demand is crypto, which is its own economy, like a $3 trillion economy, accessing real world assets in a tokenized wrapper. I don't think crypto investors want to buy a money market fund that's available 9:30 to 4, 5 days a week. Like, no. And so if your base thesis is this $3 trillion crypto market is going to 15 trillion, right? It's going to 5x, then the opportunity to provide RWA in a tokenized format to that audience, I think is really significant. And then once it's serving that audience, I think it will eventually serve TradFi investors. But we're not going to go to like my dad buying a tokenized money market fund. Like, it's not going to happen. But protocols and crypto native investors doing it, it's happening. Like, that's driving the growth. And I think that's probably underhyped. At the same time, this TradFi tokenized story is probably overhyped.
So I want to take the conversation on a different, road, right? Because I am kind of fascinated with sort of like the whole ETF journey so far. It's because in my mind, it kind of also, there's a lot of ease of access there, but from an institutional regulated side of things, well, in essence, the entire asset class was built to, from the get-go to be easily accessible. Yet somehow we kind of went full circle again. And I guess that's just the world, how the world works, and people are fine with that. My question with all, this stuff now in place, like a spot ETF is in place now, right? I think the next wave of growth is happening on the derivatives end, especially just with the crypto derivatives altogether. I think that's all the way this year. We're seeing a lot of movement happening specifically focused on that sort of vertical. Is there a similar future coming in for crypto derivatives in a regulated fund structure, similar to how we've done this with the spot side? And how does that look to you? Where does Bitwise see the future when it comes to derivatives here?
Yeah, I think there is massive growth in that space. I agree with the inherent irony of a Bitcoin ETF. It is inherently ironic, and it's subject to substantial disruption, right? Like, you could have Schwab and Fidelity offer direct exposure to Bitcoin, and that's a direct challenge to the ETF. You can get more people comfortable with managing their own wallets, and that's a direct. So I agree that that is inherently ironic. It will still be a big deal. An analogous thing is true in gold, and gold ETFs are a massive deal because the regulated entities love these regulated tools, and that's just a big part of the market. Yeah, I do think I agree that derivatives is going to be a huge area of growth. I mean, you can look at it right now. Price is down on a Bitcoin perspective, but derivative open interest at all-time highs, right? That is telling you something. That's a signal. I always look for markets that are at all-time highs when the underlying is not, as a sign of where the market is going. And this market is telling you that more derivatives products. From a Bitwise perspective, we've done a few things. So high income generating option overlays on crypto equities is something that we've brought to market. I think that's a very big opportunity. I think that could be expanded to crypto in general, right? Now, again, that's a way of productizing the volatility of crypto, which is an inherent characteristic. And I think if you can do that in a regulated fund-based format, there's a huge amount of interest in that exposure. The other area where I would think about, the derivatives intersection, I like to think about things that are like transparently obvious to institutional investors. One is that crypto is volatile. And so if everyone agrees crypto is volatile and will stay volatile, turning that into a product is a useful thing and will have a significant audience. So I think that that is true. Right?
It's something like a VIX.
I think a VIX-based product would be interesting. I think vol hedged Bitcoin exposure would be interesting, and I think covered calls are interesting. Those are like three variants of exposure with different risk and return characteristics. But I don't see why we wouldn't get to all of those things. Right? Is a core thesis. Another core thesis, another thing you can say to any investor is that the crypto markets are inefficient, and everyone will agree with you.
Yeah.
And as a result, the ability to, I'm a beta-based investor. Like I'm like the only John Bogle crypto investor in the world. But the availability of idiosyncratic alpha in the crypto space by capitalizing on its inefficiency is a story as old as time, but it's a story that's still very true today. And to your end, derivatives are going to play a massive role in that because you have to multiply your exposure to capitalize on those relatively micro inefficiencies. So I think that's another area where we're going to see substantial product and growth. I think that's been constrained because traditional investors are afraid of capitalizing on that inefficiency due to underlying platform risk and sort of areas that they're not able to do diligence comfortably. And I think the availability of derivatives to abstract away from that actually is a big value add that I think will be beneficial for the growth of that category too.
Yeah, I definitely agree. And I wonder if you guys are testing the waters with at Bitwise on any of these core theses.
You're getting like a stream into how we approach product development, which is think big picture of things that resonate with our core audience, and then how much can you deliver in a format? And we're absolutely experimenting with all of these things.
Beautiful. I've asked the same question, by the way, to like almost every single guest, but I think this one specifically for you is going to be very interesting because unlike everyone else that we've had so far on the podcast, which we started like less than 6 months ago, you're arguably, as the CIO of like Bitwise is, the most that we've had on the show that operates within like the most stringent like regulatory environment possible, right? From an ETF perspective, from a product that you guys put out there, like this now makes sense to ask to you with the administration change, with everything that's happened, right? Everyone's been talking about like, regulatory clarity, things are going to be easier, things are going to be much more fun. Is this true now? Are you feeling happier?
God, you can't imagine. You really can't imagine.
Like, tell us more. What's different now, like, from 6 months ago?
Well, there's so many ways I could answer it, but I'll start with this. We worked for 6 years on a Bitcoin ETF. Mm-hmm. And I took something like 37 trips to Washington and presented something like 700 pages of research material. And they lost a lawsuit. And we finally got a Bitcoin ETF after 6+ years, after, building the ski houses for multiple lawyers with our payments. It's been a painful process. As an example, in the new administration, we found out that an ETF got approved through Twitter. It was just like YOLO shipped yes on an ETF. I mean, that's an extreme example. But I think, if you were within crypto, the stories you hear on the outside that you don't believe are true were in fact true. So what do I mean by that? The difficulty of accessing banking relationships was very real.
Yeah.
You know, we've told this story before at Bitwise. When Bitwise was first formed, we had some of the best venture capital investors in the world, Khosla, General Catalyst, Kraft, etc. It was extremely hard to find a bank that would take our money, not to buy crypto, but to hire people to work at an asset manager. It was virtually impossible during the cascade of bank shutdowns. I think we had to cycle through 6 or 7 banks to keep the funds running. As a related example, you know, every crypto company in the space faces the risk of lawsuits and subpoenas from the SEC. All of that, you know, makes it really hard to build a company in the crypto space because startups are inherently fragile. And if you layer on both risk that soaks up executive energy and then legal costs, you know, that are really substantial. We used to joke about our business model being raising money from Silicon Valley and giving it to Wilson Sonsini because, you know, that was such a huge part of operating the crypto space. Now we have the freedom to focus exclusively on building the business.
Yeah.
Now we have the freedom to build the ETF products that we want. You know, not all of them, not quite as fast as we want, but it really is night and day. I don't think the market has appreciated how different it has been, and therefore how innovative and fast this industry will move. And you know, maybe Bitwise and firms like us were part of the tip of the spear in terms of facing that regulatory risk, but there were things even beyond what we were trying to do that faced more existential risks. Like try building a DeFi protocol under the Gensler administration. Very difficult.
Yeah.
I think it's remarkable how much crypto achieved with that level of regulatory pressure. And therefore, now that it's released and then it's actually a tailwind, I think people are underestimating how far the industry can go in the next couple of years.
So you think it's not priced in? Like this whole shift in...
I do not think it's priced in at all, because unless you were within crypto, you can't imagine how difficult it was. I mean, literally, like imagine having a $6 million check and walking to a bank and them saying, no, thank you. We don't want your business.
Yeah.
It's like, that's a wild idea. And then imagine going to another bank, and actually imagine going to like 15 banks and having them all say no. And you're just like, I want to deposit this check so I can start a business. They're like, sorry, we don't want your money. It's wild, right? It's completely wild. And then imagine trying to launch a low cost crypto ETF and being told for 5 or 6 years, no. And then you had to have, I mean, to their credit, they're a competitor of ours, although I like a lot of the people there tremendously. Grayscale sued the SEC. The first time in ETF history that the SEC has, the first time that they've been sued, and then they won, which is crazy because the law is very deferential. We were being gaslit by our regulators for 4 or 5 years, and like we finally woken up. So I don't think it's priced in at all, because I don't think people recognize how oppressive it was, because there's no precedent for it being, for a normal industry being that oppressed. It hasn't happened. And so I think we haven't yet seen the rebound in innovation and growth, but I can tell you it's coming.
It sounds like it's an order of magnitude easier to start Bitwise today than it was like 6 years ago.
Oh man, yes, absolutely. It's like you want to build a product and now you can.
Do you think that like you expect more Bitwises to show up now because of that case? Like, are you concerned about like the number of players that are going to start showing up, given that now there's like this ease of being able to like actually operate in the space? Or you think that there's a barrier to entry and sort of like what they will offer?
Yeah, I think you're going to see more startups in the space and more people competing. And certainly, like, you know, BlackRock is a competitor. That's really fun. But the pie has grown so much that we'll take it every time, right? Since BlackRock has been a competitor, our AUM has 10x'd. You know, do I envy their $50 billion? Of course. But am I glad they're in the market? Does it pave the way for our growth as well? Yes. So there'll be more competitors, but there's just much more opportunity. We were just talking about income-based strategy overlays on Bitcoin. We were like 5 years of can we do Bitcoin, right? So like I'm really excited that now we have all these other opportunities. So yeah, more competition, but I'll take it 10 times out of 10.
With the AUM that you guys have today, like where do you see the vast majority of like the next 10 bill, the next 50 bill coming in from? Like, is it US based investors? Is it like, you know, are you seeing markets, pockets like across the globe that you feel a lot more excited about?
Yeah, I mean, there's just so much growth in the U.S. still to come. I think we've really only scratched the surface. Our ETF is what, $3.5 billion. I think it'll be $35 billion in a few years. So that kind of growth, I just think, is there. An example of why you might wonder, like, Matt, what are you talking about? Why? I was just at the Barron's Top Teams event, which is the largest financial advisor teams in the U.S. These guys manage $1 to $100 billion in assets each. And I asked the room, how many of you can buy a Bitcoin ETF yet? And only about 40% of the room could even buy it yet. So there's still...
Is it from a regulatory perspective or just from a...
Yeah. So the crazy thing about the advice space is it works like nuclear keys. So the SEC has to approve an ETF, and then your platform has to allow you to access it. So if you're at the big ones like Wells or Merrill Lynch or Morgan Stanley or UBS, that second key hasn't really turned. Maybe it's turned a tiny bit, 10%, but we haven't even seen, I think we've seen a down payment on ETF flows. So as I think about like where the next 10, 50 billion is going to come from, I think a lot of it's just going to be that, that 1 to 10 on the existing ETF and index-based products. But I think there is an equally large business to be made on the things we talked about, on income generation on Bitcoin and on-chain solutions across staking and tokenized real-world assets. I think those are also multi-billion-dollar businesses. Our expectation at Bitwise is, sort of every asset class has a few or maybe one iconic asset managers in that space. Blackstone and private equity is maybe the best known example, but PIMCO and bonds or Alarian and MLPs. We think there's that level opportunity in crypto, and there are a few firms that have a shot on goal. We think we're one of those, but I absolutely think there'll be multiple 10, 20, 30, $50 billion opportunities in this space.
What do you think is the biggest blocker on turning that second key from like UBS, Wells, all these guys? Like what's stopping them? You're having these conversations every day. So what do you think is stopping them? And when do you think that's going to shift, I guess?
Yeah, I think the answer is time and anchoring bias. Many of the people who make those decisions first encountered Bitcoin from a negative story, whether it was Mt. Gox or Silk Road or whatever. And so it just takes the passage of time to get them over. But I think it's happening. I think it's all going to happen this year in terms of turning those keys. When we go to meetings with them now, it's all the senior leaders. They're very focused on it. It's been the biggest ETF launch of all time. I think it's going to happen. Crypto just moves at a different pace than TradFi. I mean, this. We're like very anxious in crypto that it hasn't happened. We're 15 months or whatever into the Bitcoin ETF. But for most ETFs, it takes 3 years, right? We'll get there faster than 3 years on Bitcoin, but that's sort of standard. So we're just impatient as an industry. It's just the passage of time. We're going to get there.
That makes sense. Matt, I have so many more questions, but I think like we're almost out of time. I'd love to just wrap it up with like one final like thought from your side. Sort of like with all this regulatory shift, like what do you think is going to be the highlight theme of this year? Like all the digital asset space. Like, I mean, are you more interested in sort of the consolidation that's happening across the board, the M&A activity? Are you much more excited about like specifically on the Bitcoin like strategic reserve and how that might affect like the space? I guess what's occupying like your mind for this year?
Man, you're trying to put one thing. I think I'm gonna struggle with one. I think there are a number. I mean, we're excited about the stablecoin bill. We're excited about the market structure bill. I think we're gearing up for a new sort of DeFi summer. I think the institutional move into Bitcoin is going to be significant. Really excited about option income strategies. My big framing, if you're early in a technology, when it really hits its exponential curve, you sort of feel that you've gone all the way, right? Like if you were early following Facebook, by the time it IPO'd, you were like, we've reached maturity. Yeah. It IPO'd at $38, right? Like this moment where it feels like we've entered the mainstream is not the end. It's just the beginning. So whatever category I look at, I think there's 10x growth. So I think everything you said, I expect to have happen this year. I do expect the US to buy more Bitcoin in the strategic reserve this year. And I think the whole market is just waking up to, how significant this opportunity is.
I couldn't agree more, to be honest. Like, I think this summer is going to be an interesting time for a lot of folks. And, I just can't wait to see it like actually just take off like we all hope it does.
I think it will. We keep throwing out summer words like DeFi summer 2.0, stablecoin summer, institutional summer. I think they're all going to happen. I think it's really a phenomenal setup. So I'm excited for it.
Matt, thank you so much for taking the time today. I really, really enjoyed this conversation. Thank you.
Yeah, thanks for having me. This was fun.